and welcome to the LCR webinar, a worldview webinar on what to consider when investing internationally. This series looks at bringing together experts on global investing and global lifestyles for our audience. And we're proud to have today two founders of Fibre, who are specialists in international payments and currency exchange management, and Tom Garvey, who's president of LCR Wealth, an SEC-registered investment advisory and registered investment management firm here in the US, and a regular on the Worldview series. We're going to give this a minute since it takes Zoom a few seconds to bring in all of the attendees, and then we will kick off with a little bit of housekeeping, some disclaimers, and some introductions. We're looking forward to diving in on the conversation about international investing, since frequently with our clients, when they achieve a level of success and they start to build their domestic assets, they look at global options and the global lifestyle that goes with it. I'm sure that we'll dig in on some lighter areas, but also give you some good technical details on specific choices and options as we get into the content. Let me just give this another minute as people join the webinar. Okay, so introductions and housekeeping. First of all, we are reserving time for questions. So if you have questions that we will have time at the end of our conversation. But also, if you have questions during the webinar, feel free to use the Q&A button, which is at the bottom of your Zoom screen. That will show to all of the panelists and Anna, who's also a host in the background. If it's an easy question, we can answer it right there in text, or I'll work it into the conversation, or we will add it at the end. My name is John Baker, and I'm the CMO of LCR Capital. I'm the host today, and will be moderating the conversation and posing the questions to our panelists. Again, before we jump in and ask them to introduce themselves, I will need to read a quick disclaimer. This is required by the SEC and financial authorities around the world. So stand by as I read this quick couple paragraphs. This presentation is limited to the dissemination of general information regarding investing and financial options. Accordingly, the information in this presentation should not be construed in any manner whatsoever as a substitute for personalized individual advice from LCR Wealth or Fibre. While we will be discussing areas of immigration law, equally, none of the conversation or QA can be considered legal advice. Clearly, if you are seeking legal advice, you need to contact an attorney and enter into a client-attorney relationship. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Any client examples are hypothetical and used to demonstrate a concept. And of course, past performance is not indicative of future results. Okay, so that is the disclaimers, and I expect that all of you are rather sophisticated investors. Our community tends to be, but again, it's good practice to be compliant with financial regulations, and we follow that. So let me first start with introductions. William, would you like to introduce yourself and a couple words about that?
Absolutely. Hi, everybody. My name is Will Stevenson. I'm a director and co-founder of Fibre Payments. So our business, we're a specialist in international payments and currency exchange. We founded in 2021, so we're quite a new business. But what that means is we carry all the latest banking capabilities. And what we set out to be is a foreign exchange business that not only has the best technology to support us, but probably more importantly, be able to offer our clients a handheld service and ensure that they're of course looked after throughout the whole process. My main role within the business, so I deal day to day with a lot of private individuals that are either Brits moving abroad or internationals investing in Europe and the UK. A lot of our transactions tend to be property related or investing in certain visa schemes and so forth. We have a lot of experience in the real estate market. The jurisdictions I would say are my strengths. Portugal probably being number one. I actually lived there for a year in the Algarve, so back in 2020. So I know Portugal extremely well. I enjoy speaking with lots of clients that are buying and moving their lives there. But also the Caribbean is a big market of mine as well. Barbados probably being the biggest. You can see that I'm of course choosing these nice jurisdictions for a reason, as I do get to visit every now and then. So
well, it's okay to choose investment and work choices around a global lifestyle. We actually support that.
Thank you. Well, that's that's myself. Look forward to hosting.
Dan?
Excellent. Thanks, Will. Thanks, John. So I'm Dan. I'm co-founder with Will of Fibre. My background, I've been in sort of payments, financial services for 8 years, and generally, my area of expertise is working and collaborating with lawyers and financial advisors in specific jurisdictions. So helping with property and investment related transactions in the UK, Europe, and then in the Middle East. It's a growing market for us, but we're seeing a lot of clients moving funds to new jurisdictions. So that's generally where my expertise lies. I started my career with a very traditional brokerage, very service driven, and then joined Will in the city with a tech based firm. So when setting up the business, we realized that there was a real gap in the market to marry the two areas of the sector together and accommodate the client base that we work with best.
Sounds like the background for fintech, which is an area that we all love. Tom, could you like to introduce yourself and LCR Wealth?
Sure. Well, first of all, I'm very happy to be back with everybody. My name is Tom Garvey. I'm the president of LCR Wealth. I started 2 decades ago in financial services with GE Capital, moving on to PricewaterhouseCoopers, a firm called United Capital, and Goldman Sachs. I left Goldman Sachs a few years ago to start LCR Wealth here in lovely Westport, Connecticut. And happy to be on today and look forward to all your questions.
Excellent. Thank you, Tom. So as I said in the intro, and I know people are still joining in, we want to cover a little bit of the lighter side, some of the lifestyle pieces to why invest internationally, but we also want to make sure that in the next 45 minutes or hour that we also get into some real details. So we've got a balance of questions on that front. We're going to start with, why invest internationally? So start at the very top of the decision tree. As I mentioned, a number of our clients, as they achieve a level of success in their home countries, realize that there are real opportunities in international markets, in having non-home country denominated assets, and actually investments that also bring a degree of a lifestyle change. Let's start with, some of the questions that we get from our more financially minded clients and folks when they look at international investments. Tom, so you talk with international clients every day. Part of your work is working. A big part of your work is helping international families who are considering moving to the U.S. Why do you think there is such an interest in U.S. equities and alternative assets?
Well, John, the most important fact pattern we see is the U.S. is the largest and deepest equity market in the world. To give you an idea, the entire global equity market's about 89 billion, and the U.S. is, trillion, and the U.S. is 41 trillion of that. So again, if you compare that to say the next two, which I believe is Japan and Shanghai, they're 5 trillion each. So really, the U.S. market is the place to go if you're listing your company anywhere in the world or just a domestic company that we have. We also have probably some of the most stringent laws protecting the investor than almost any other market in the U.S., with the EU being and UK being, close second on that. So, a lot of people look at it just simply because of the depth and breadth of the market. Other people are concerned about currency. So the U.S. is the world's reserve currency. Again, 90% of all international trades, and I'm sure our friends from Fibre know this, are in U.S. dollars. So, again, you have currency protection, you have depth of equity. These are the major reasons people are drawn to the U.S. markets.
Excellent. So that leads to, in a sense, for the individual, thinking about portfolio diversification, currency hedging, and obviously the returns that can be achieved. Dan, you've worked in foreign exchange for quite a bit of time, as you mentioned in your bio, and also we're in the financial world and a service business. I mean, when you think about the big sectors you're seeing, thinking about properties, people moving money for equities, buying commodities, what do you think has driven most of the transactions? Now, I recognize that a big chunk of transactions are corporate, but we're talking about for retail investors.
It's a really good question. And I guess as a business which focuses on property and investment related transactions, but from our perspective, I'd have to say it's property related. There's loads of factors that influence the client to make those decisions. There's a lot of payment channels and jurisdictions which have historically always been attractive to individuals from certain countries. So Brits buying in France or buying in the Caribbean, and then you have Americans looking to buy in the major cities in Europe. But there's a lot of factors now which are affecting the demand in different jurisdictions. So tax and interest rate changes. I mean, we're seeing that the dial is slightly turning towards, let's say, the Middle East, given the tax benefits there, or Europe for those associated benefits, whilst taxes are going up. So I would say property, but there's a multitude of factors which is influencing the demand.
I believe it. So property obviously tends to be a big value transaction, but do you see people, moving, sort of smaller amounts of money, but a higher frequency to support things like students studying abroad or travel plans, or maybe a second home, that sort of thing, operating expenses?
Yeah, for sure. Because of how much easier it is to be more mobile globally now than let's say it was maybe 20 years ago, there's far more demand for moving to a jurisdiction. Even for a few years, you can have a specific type of visa, and we saw this over COVID, where a lot of individuals went to Barbados for a year, and I think that's translating into other areas. So yes, we're seeing more people look to travel overseas to work and even educate overseas too.
Interesting. Yeah, we've actually seen that as well, the sort of digital nomads who are picking up because they can work remotely and moving to another location, and the governments are providing visas for that. Some governments are providing visas for that. William, we always sort of hear economists say that everyone is a rational actor, and we only make decisions based on, the hard financial analysis of potential return or risk versus return. I saw in your bio that you were a professional golfer, and I know you mentioned there that you lived in Portugal in the Algarve. I'm sure that had a lot to do with it. I mean, how often do you see clients who, obviously you're talking about the technical details of moving money or making an investment, but then you're asking, sort of often in the small talk after the business is done, why are you doing it? How often do you see it's for lifestyle?
Yeah, absolutely. Firstly, I have to highlight, not a very good professional golfer, otherwise probably still be competing. But no, I find it really interesting. Speaking with clients and understanding the driving factors for them to make these big moves. I think one thing I've really noticed in the last few years since COVID-19, and of course experiencing lockdowns and all this remote working, I think what was really interesting from that is a lot of people learned that you can work remotely. Of course, I mean, like hosting, I think now we can agree webinars are far more common than they used to be before COVID. And of course, they work really well. I'm sure we have people from all sorts of jurisdictions. But yeah, I think being able to have I think these days a strong internet connection and your laptop means that you can pretty much set up from a whole wide of locations. So a lot of people I've been speaking to over the past few years, they've said, oh yeah, I think sitting at home all day during lockdowns, they realize actually, you know what, let's have a complete change in our lifestyle. I've seen people move young families. Daniel mentioned Barbados actually did a scheme which was a 12-month working visa. It was come and work from Barbados for a year and of course see how good it is. And yeah, we had a lot of clients that did exactly that, and I think they realized that it was extremely easy to do so, and yeah, with travel being so accessible, it's really easy to get to many of these places. Yeah, a lot of my clients that are golfers, of course, they're drawn naturally, as you would be out, especially when they're from the UK and you're fed up with the inconsistent poor weather here. I've speaking with a number of clients moving to the Algarve because they've got great golf courses. Yeah, they've probably got sun for 300 days of the year, which makes a big difference. But not only that, yeah, I think they're the lifestyle main drivers, but actually, yeah, you can of course live a pretty healthy, active lifestyle over there, and tax wise, yeah, there's so many different benefits of moving to these certain jurisdictions, which I think is clever of these countries to do so to attract those
to
types
offer
of
them
people.
up. Yeah. I mean,
Yeah.
I know that when I moved to London and lived there almost 10 years, I used to say to friends that if I were to do a hard economic analysis on living in London, I wouldn't live there. The cost was high.
Yeah.
The size of your housing was lower. The weather was
Yeah.
fantastic. A total plus column. And yet I was really happy to live there. And there was a lot of other lifestyle pieces that came into it. I mean, Tom, how do you weigh into those lifestyle choices with clients? I mean, obviously it's not it's a little bit of a tough one because, you know, people looking at their portfolios think about hard returns and they think about, you know, what they're expecting from their choices and with the advice the plan you put together. How do you take in these lifestyle conversations?
Yeah, and you all make great points. I would like to say one thing about Will, though. He played the only sport where you could be in the top 1/10 of 1% of the world and call yourself not very good. Okay, I don't know almost any other endeavor where that's the case. So I'm sure you're not very good. Would be a lot of fun to play with. But you know, John, absolutely. Look, you know, one of the things that have happened in the last 10 to 15 years is choice. And freedom of movement has become an overriding conversation with all my high net worth clients. And the quality of life, once you've made enough money, becomes paramount to almost anything else, right? We all start out, we all work very hard, but when we've achieved a certain level, and it's different for everybody, you know, they start focusing on those things. So I have those conversations with clients all the time. Interestingly enough, when people talk about investments, the first thing they ask you is what was the return, right? They all want to know the returns. The fact is that you need to know the after fee and after tax return, because that first return number means almost nothing, right? So any jurisdiction, you know, whether it's in the United States, when you go to Florida or Texas that have no state taxes, or you go overseas that have very low taxes, or Dubai, which has almost a de minimis tax. These are really important things. You know, they can change your lifestyle. I actually had a very good friend of mine, a hedge fund guy, who made, I think, somewhere in the neighborhood of $5 to $10 million a year. And he moved down to Puerto Rico, and he was able to buy and pay off a $4 million house in 2 years of taxes that he would have paid in New York. You know, like these numbers, you know, they do move you, right? And he has a beautiful estate down there, and he comes back, you know, once every 2 or 3 months to New York, and that's it. So yeah, I mean the freedom of movement, the economic underpinnings, which is what you were saying, they have everything to do with these decisions. And when we talk about returns, at least here at Wealth, we talk about after fee after tax because all the other stuff just is, it's just not important.
It makes sense, and making a personal plan that fits exactly both the lifestyle and the financial goals clients is critical. So we do also want to get into even more specifics around the choices you make when you're looking to invest internationally. And I thought there's a couple areas we want to discuss. One of them is around property, because that is a big driver, as Dan said, in terms of why people start looking internationally, particularly with our Latin American clients, but actually across the world. The other is alternative investments, since frequently that's an area where you do, the investment is a significant amount of money in one transaction, but also because it's often where you can get access to things that you don't see domestically, and that opens up that thinking globally opens up opportunities. So shifting to property. Oh, and one other thing, we did see some questions come across on the Q&A. Feel free, if you have questions, to post them there, and I can work them into the conversation, and we'll also discuss them at the end. So talking about property. We've talked a little bit about the lifestyle benefits you can get by owning property, say in Portugal or in the United States, or anywhere in the world. And this obviously leads us to a conversation about the different visa programs, something that we at LCR know quite a lot about. But first, Dan, when you think about the Portuguese program now, I know it's in a bit of transition, but can you talk a little bit about both Portugal and some of the other European markets that are offering property-based residency? Again, stepping back, in the US and parts of the Caribbean, it's less about property. Frequently in the US, it's investment in a business generally, or having family here, or a job being sponsored by a company that brings you to the US. But there are markets around the world where it is very much focused on property, particularly in Europe. Could you talk to this?
Yeah, sure. I think the attractiveness of the European visas has grown significantly because of how straightforward they are to obtain. And generally speaking, the emotion it carries with them. I mean, if you are to get visa-free travel or citizenship in Portugal, you don't have a long flight. If you wanted to go to Spain, France, Greece, or anywhere else, it's definitely something which we've seen a huge increase in demand. I think in the last 12 months, that demand spiked probably quicker or higher than what we're going to see in the near term anyway, because the exchange rate was so favorable for anyone holding US dollars and who was looking or considering visas in Europe. But the visas themselves, they do range in cost, but generally speaking, we help with it's Cyprus, Greece, Spain, and Portugal. And with Portugal in a bit of a transition, we're seeing that clients are looking elsewhere, but Portugal remains, from our side, probably the most attractive, given the tax benefits when buying a property over sort of 500,000 euros or equivalent of. So that's something that is always going to be a factor in someone's mind when considering these visas. But at the end of the day, if it can provide a visa and citizenship in said countries, then we're going to see them continue to remain attractive.
Yeah, today is a big day on the Portugal Golden Visa scheme. Yeah. I know the Assembly is voting on the proposals from the government. It does, we shall see, and obviously here at LCR we'll be communicating as soon as we learn what the final decisions are and whether it will include or not include property purchase. One of the things that drove their changes was the run up of property values, and so I have a feeling that property will get excluded from the scheme, but that other types of investments like funds and investment in businesses and things will carry on. So Tom, put your American advisor hat on. I'm sure there are some Americans on our webinar today. How would you approach the conversation with a client about how European property specifically could fit into a smart investing retirement plan?
Well, sure. I mean, and again, the basis of diversification is true no matter where you live in the world, including for Americans. And if you buy an asset in Europe denominated in euros, that is a good form of diversification. The other thing is when you look at real estate markets, although in short periods of time they can be very volatile, over long periods of time they tend to be a very steady increase in value over time. And certainly if you were one of the early people in the Algarve, you're feeling pretty good. Just like if you were, pre-COVID down in Florida, I mean, they've seen, returns of 30, 40, 50% in 2 or 3 years on a lot of properties down there. So, again, it goes to the conversation. If you're US, you're already in the biggest, most liquid market. It's good to go out of it a little bit, get something denominated in something other than US dollars. And I think Dan brought up a great point with the US dollar being at its strongest over the last year or so. A lot of US investors went to Europe. I mean, they didn't just go there for vacations, which were about 20% cheaper than they were a few years earlier, but they bought a lot of things. They bought into companies, they bought into real estate, they bought second and third homes, they did investments there. So, we've had that conversation quite a lot. And my understanding is the US was the number one applier for the Portuguese Golden Visa last year, which probably surprises nobody who's spent any time there, because it is, it's like going to California without the Californians.
About the issues. Excellent. So going into a little bit of the details on international property purchase, Dan, Will, I mean, can you talk to some of the things that people need to consider? So obviously, there's the exchanging of the asset investment, but there's also stamp duties. What are some of the things that you see?
Well, yeah, absolutely. Yeah, of course. Yeah, there's a number of different costs and fees that of course need to be considered. Absolutely, stamp duty can be pretty different in all these different areas, but legal fees as well. Of course, is going to be a big part of that. In terms of the actual FX side of things as well, one thing to note is, of course, the markets are moving every single second, and these moves aren't going to happen overnight. Often, we're probably seeing, for example, a US client moving into Europe. The process can be as long as 2 to 3 months. So within that time frame, it's so important to make sure that if there is an FX requirement, that's being managed properly. I've seen it many times, and because the markets have been so volatile in the last few years, of course, anywhere from a 1% move or up to the dollar's probably 20% different to where it was this time last year against the pound. So making sure that that's being managed properly is where you're going to see a huge difference. We always say as well, using a business such as ours, where we're of course going to save you money versus using your bank, that can mitigate against a lot of these fees, whether it is your legal fees or removal costs and so forth. There are lots of things to consider, and I think there's some pretty useful guides out there to be able to make sure that you're remembering everything.
And go ahead, Ben.
All I was going to say, on our website, because we collaborate so frequently with lawyers and advisors who are helping with these transactions, we do have breakdowns, because generally speaking, the fees across Europe tend to be around 10 to 15% for any property related transaction. And what we find is there's with a property transaction, rather than sort of a business transaction or anything, there's a lot more emotion that carries with what's happening. So that's where having the appropriate guidance and having the visibility on what might occur really makes a difference in the success of it.
Excellent. Yeah, no, that's a really good point. And it actually brings the two themes together, about the fact that this property purchase is often for a lifestyle choice, and people do fall in love with their homes and the memories they make there. So it's, but we're all also business actors. So going back to our economists, we do like the idea that you could be buying on an exchange rate shift that, if it goes back to a historic norm, gives you a 15 or 20% lift. Yeah. I think that's on Tom's plate to give that to give that advice, figure that out. Let's shift to alternative investments. So, in our world, the alternative investments are private equity investments. It might be investing in a venture capital fund. It might be a real estate fund in a given area. We work with funds in the US. We also work with funds in Portugal. So, William, I was going to take this one to you.
Yeah.
So I guess it's sort of a question. We know that the typical investment level on a private equity fund is at a minimum around $100,000. They're often 250, and if in the case of some of the big name mark, say a venture capital fund, it can be even higher than that. So are you seeing that as a reason people are engaging you guys, is moving capital into alternative investments?
Yeah, absolutely. I'd say most of our clients are of course investing in actual assets, and quite interestingly, we've had some pretty unique ones recently. We had a client who invested actually in a very high value supercar. So it was $5 million plus. That client was actually from the UK, residing in the Middle East, but the car was in Los Angeles. So you can imagine there was a lot of exchanging that needed to happen. But this client was ultimately buying this extremely expensive car because they believed that it was going to be an asset that was going to increase in value, which I think already it has. So that's a pretty unique one.
A $5 million supercar.
Yeah.
Was it in a movie? Is this Tom Cruise's car? Is this?
Wow, it looks like it could be a Batmobile, but it's a very a pretty unique car. Very noisy, and they don't make them anymore, which is hence why it's supposedly going to be going up in value, which I think we're seeing. It seems that as well in that type of market as well. I know that's been really popular. I know I'm sure you'd class that as a pretty.
Raise a good point too.
High risk investment.
In my introduction, I was talking about private equity, but of course, collectibles is a source of alternative assets. So, Tom, how do you see? Getting into sort of the details there, obviously you're helping clients make decisions about different investment funds, whether it's sort of the mutual funds and ETFs you can buy as part of a general portfolio, or a specific longer term choice in private equity. But can you talk a little bit about literally the mechanisms? I know that you manage an access fund for Americans interested in international investments and venture capital through Iron Pillar. Just talk a little bit about the different mechanisms that people can access these funds.
Sure. Well, most of the really big private equity firms give an offshore and onshore option. So Americans would tend go through the onshore option. Offshore options are generally done through 4 or 5 centers like Mauritius, for instance, in Asia, or they'll set up the funds there. US investors tend to want to access international funds via a structure in the United States that's overseen by the SEC. So there's many times that we have to create an access fund in the States, just so the client and their advisors are comfortable that you're comporting to all the US laws. So, there are some amazing opportunities internationally. There always is. There's, China was the big place people went for the last 20 years. India is the new place everybody's going, and for good reason. Again, they went from the 10th largest economy to the 5th in the last just decade. And so there's obviously some tremendous growth there. And with the stresses going on with China, it's actually accelerating a lot of China businesses to India. So there's a lot of money in the US heading in that direction. There's some that's heading to the Middle East. They're trying to create themselves as a center. And if nothing else, they're a center for collecting capital that may go into India or other parts of Southeast Asia, but that's where they're going. So we do a lot with that. International clients actually find those things easier because they can easily send to Dubai, or they can easily send to Mauritius or to Singapore and places like that. The US, because of tax considerations, we just have to lay it out for their tax attorney so that they understand exactly what's going to happen. And like anything else at the US, people are always worried about taxes. The fact is, if you plan properly, taxes aren't onerous. It's the people who don't plan. It's the people that don't get good advice before they move money that usually fall into a trap. When we're bringing clients into the United States, a year or two before they ever become US citizens, we already have the plan to move their assets, how we're going to do it in a very tax efficient way. So, but it is a tough place to do it if you shoot first and ask questions later. You have to do some proper planning.
So the investments that you've had people invest into that you are sort of on your platform, if you like, do they tend to be? Are you doing it based on long-term? Are you offering them, and are people investing based on long-term trends? I know you've had a real estate fund, the VC fund. Obviously, you can get access to any fund in the US. How do you advise people?
Yeah, the short answer is when we're working with clients, we're doing a full asset allocation, and it's usually just one piece of that allocation. And you can either do it in liquid assets, or you can do it in ones that are illiquid for a while. The idea is if you can afford to do an illiquid asset and you have a good manager, the likelihood is that you're going to have a better return after 5 years than you would with something more liquid. And that's because the people who put that money to work, they know they're going to get it 5 years or 7 years, depending upon the product you put them in. And you can do a lot more work than money that goes into something that can come out the next day, right? So anything that's fully liquid is wonderful if you have liquidity needs, but you're likely to get a less of a return than something that's actually illiquid, because again, that money is fully to work for those 5 years without anybody pulling it out. So, when we talk to clients, the first conversation is, does it fit in your overall asset allocation? Does it make sense? Check that box if they say yes. Does it have to be liquid, or it can be illiquid for a little while? We check that box. If they say yes, it can be a liquid. I have plenty of liquid assets, no problem. And then we tend to either look into the marketplace or put something that we really like on our own platform that works for clients. And real estate, gets a disproportionate amount of private money because it is one of the biggest markets in the world next to fixed income. And everybody has some sort of familiarity with real estate. You can't say the same for AI or biotech or things of that nature, but you can absolutely, everybody can relate to some sort of real estate, and make sense to them. So they tend to be the biggest draws. They also tend to have some of the best returns over time too. Like we did a venture capital fund in India, but based in Dubai, and the fund is structured in Mauritius. So yes, there are a few steps you have to take to invest in these things, but they have, India has more unicorns in the last 5 years than even Silicon Valley does. So, these are just great opportunities. They need to be really well thought out, fitting into your portfolio. But if you have the right people and it makes sense for your portfolio, you can have some really good results.
Excellent. Yeah, it's a good point there about making the choice of liquidity. Obviously, people are aware of their financial needs, but if you can see something that looks like it's on the right trend with an expected higher return, it makes sense. It's okay to lock up your money there. So let's turn to foreign exchange specifically. I know we've talked about it a little bit in the conversation so far. But getting into the details, I know that when I lived in London, I literally had 2 Citibank accounts, and I would go online. This is 1999, and I was able to log into Citibank and move money between the 2 markets, and even move money if I sort of felt like the exchange rate was shifting, because there were some swings during the years I was there. I wasn't moving a lot of money. Let's be honest. I was an agency guy on a fixed salary and renting a flat. When does it make sense to engage with you guys? What is the or even would it have been smarter for me to work with a foreign exchange partner even then, at a base,
So it's really good
with minimal needs? Go ahead, Dan.
So it's a really good question. The landscape has changed so much much over even the last 10 years, even the last 5 years, with everything here in the UK with Brexit, for example, that's affected regulation. But fundamentally in the UK has been at the forefront of financial services for a very long time. And that's through innovation of tech and just changes in regulation. When you were likely transferring funds, you had your 2 bank accounts, but more often than not, it was probably quite a while before funds would be transferred. It would maybe take days. Things had to be done using paperwork. Nowadays, you can open a multi-currency account for 30 currencies in about an hour. So it's very different. And what that does, it just opens up access to new markets, and it gives access to new ways of holding money. The main thing is that even then, banks have always made money from a variety of things, and a key driver of revenue for banks has always been through foreign exchange. It's only now that there's more visibility over fees that it's becoming more apparent how much money they were generating from transactions. And that's why we exist, because the banks still charge a lot of money and people know how much they charge. So that's where that comparison really becomes quite prevalent. So even with smaller transactions, it's really important to consider your options and really weigh them up against what you're looking to do. But more often than not, considering traditional methods against new banking methods, like us, for example, is going to make a big difference.
It's interesting that, as you were speaking there, I was thinking back, I never had any sense of the fees or the exchange rate charges I had during those transfers. And Tom, it reminds me of the way a lot of brokers work in terms of hiding their commissions and fees behind the curtain, whereas obviously as a registered investment advisor, you disclose. So William, just again, trying to simplify it down, do you have a rule of thumb? You say, look, if you're only moving $10,000, it doesn't make sense to engage a firm, just do it through your bank. Is there a rule of thumb that you use?
Yeah, I would say that our clients tend to be, of course, when making a larger transaction, they're buying their property, we're holding their hand, we're talking to them about the transaction they're making. We've most likely put together a proposal and a plan, which would consider a number of factors, being how risk adverse they are, what I would call their budget rate, and of course their time frame. So there's a lot more planning that goes into those larger transfers. But when it comes to these smaller ones, 10,000, it's still really worth considering using a business such as ours, because you might not need the whole advice and so forth, but you know that you're going to have a platform which is really easy to use online. You'll be able to achieve far more competitive rates than you would with the bank, and there's going to be with us there's no transfer fees either. So I find a lot of feedback of clients that had used their banks previously to make smaller payments, say they're paying a member of their family abroad, and they've transferred via their bank. The funds that have landed have been less than the amount that they intended to send, and that's just because the bank would send the funds through the cheapest possible route. It's probably going to be extremely slow, take a matter of days, and making sure that what we would do is streamline that process and make sure funds are delivered in the quickest method possible. So to answer the question, I would say still more than worth looking at a company such as ours for even transfers in the tens of thousands.
Yeah, I can assure you that I don't think I ever talked to a single human being in that entire time. I was a digital marketing guy and would only stay behind my screen. But also, I think that if you were to walk into the typical bank branch here in the US and said you wanted to do a foreign exchange transaction, they might look at you like you were slightly crazy because they don't have that much experience with it. So I guess, between the service and the fees, there's a lot there.
Absolutely.
Tom, does it raise any? Well, before I go to you, Tom, let me come back down. A number of countries have foreign currency restrictions. How do you handle, you mentioned 30 currencies. Are they only the currencies that are not restricted? If you're Indian, you can only move so much money out a given year. There's obviously, when you get into, more developing parts of Asia, there's quite hard currency restrictions. How do you guys handle that?
It's a really good question, and because we're so close to London, one of our key partners is the biggest agency network in London. We come across a lot of international clients clients who are working and holding with large sums of restricted currency. So you're talking about Indian rupee funds in China or South Africa. There's not really any way to get round of capital controls. Funds generally are traded more freely in dollars, but the limitations from the local currency do exist. There are alternative ways to transfer funds, but through traditional methods, the secure methods and the safest methods, there's not really any way to go about that. What it comes down to is proper planning, because then you can manage the transaction over a number of family members, or you can get free limitations or limitations lifted with the central bank. The main thing comes down to planning, and that's how we support our clients from that side.
So in fact, that's a service that you're providing in terms of developing strategies, I'm sure, with tax and professionals in the market that help you work through those choices to allow the client to do what they want to do. Makes sense.
Exactly.
Tom, does it raise any issues in terms of know your customer in the US? Obviously, if you're moving capital with a big bank like Citibank, they're taking care of all of that. Is there any issues when you're working with a third party?
We haven't run into any, and I can honestly say in 20 years, I haven't run into any, because I'm using the very big banks and big custodians in the United States. So they're all required. In the United States, the people who actually house the money, the banks and the custodians, have that requirement by the government. So it's not put on us. And quite honestly, whether it was my own domestic client base or all the clients who work with LCR, no one's even, been an issue whatsoever with the government. And one of the nice things about the program with EB5 is you're approved by the Homeland Security before you can make an EB5 investment. So it's really hard for me to believe that somebody would find a problem with that later on once they've approved them to become a citizen. So, we tend to be very fortunate that way, that we run into none of those. And we also don't work with countries that are flagged like that, like Russia, for instance. We're just not working with any clients like that. So, most of our clients, if not all of them, are from friendly countries. They all have to get approved by Homeland Security. And so we just really don't run into that problem at all. And even if we did, it would be on the banks to figure it out and let us know.
Excellent. Yeah, I mean, and I'm sure just for Dan, are you regulated under, obviously you must be regulated under British law, but how does that work in the local markets?
It's a really good question again. So all client payments are managed through regulated entity, which is an electronic money institution here in the UK. So they ultimately adhere to the highest standards set out by the Financial Conduct Authority. What that does and means is there's no difference in security between us and any tier 1 bank in the UK. All client funds are held with Barclays. The benefit is that client funds are managed through a liquidity provider which transacts over 100 billion a year. So that translates to the savings which they get on their exchanges.
Excellent. Realize I'm giving you slightly the harder questions, but you did say you had worked in the industry for a while, so I'm not surprised your answers are quite smart. So turning to Q&A, we do have a couple questions here through the tool. One was, I see already a number have been answered. That's great. And it looks like there's some connections being made here. That's a big part of these worldview seminars, is about connecting people. But a question, I think, Tom, this may be for you. Questioning about gold as an asset for investment and the possibility of it going up or down. We did a commodities webinar actually a couple of weeks ago. I know we didn't discuss gold in too much depth, but can you talk a little bit about that? And even and maybe I'll turn to William, to you on the second half of the question about forward thinking on the expected changes in currency rates. Tom?
So gold, much like crypto, supersedes conventional wisdom on almost every single level. There are people that have been brought up in a culture where gold is considered more highly valued than the market. It's also, unlike many other things, used industrially and used cosmetically, as well as saved. I have a few clients that are interested in gold. Everybody thought it'd be a huge inflation hedge when inflation hit. It turned out on this time, it wasn't a particularly solid hedge. And it's an asset that pays nothing while you hold it. So, if you work with the HNI and the ultra HNI in the United States, almost everybody has a small allocation to gold, but it's more of a comfort should the apocalypse happen that you have some gold. And most of the HNI people actually physically hold gold, not buy gold or buy gold futures and things of that nature.
This is sort of putting gold bars under your mattress, like people used to put cash in the old days?
Usually it's coins. I have a couple of clients who have at least $1 million in coins. And, God love them. If we ever get to the point where that's of value and nothing else can be exchanged, then I think we have bigger problems than whether you have gold or not. Chatting with the head of Bloomberg Commodities, if you compare gold to, say, the gold miners, you would have made a lot more money with the gold miners over the years. So buying the equity of gold miners. And the other point about gold too is, I'll give you a perfect, for instance, gold had been going up and has been going up the last year or so. And Barrick Gold just reported that they manufactured twice what they did the year before. So, as a commodity, they can always make more. And that's problematic for the long-term growth of something, right? It's one of the reasons why people believe in Bitcoin, because there's only so many Bitcoins that can be made, for instance. So again, we don't do a ton of work with gold, to be fair. Like I said, I have some clients who like it. Most of them buy the physical versions of it and house it somewhere. But it's not a huge part of the portfolio. And when you put it in portfolio software and design it in, it's generally not helpful return wise. It is diversification wise. And so that's why some people like it. But over time, it hasn't been very helpful on returns.
Interesting. Yeah. And I imagine some of those coins also could turn straight into collectibles, which might give it a little bit of a, but again, no annual return, that's for sure. So William, the other half of the question, would you like to look into the crystal ball and have a conversation about where you expect exchange rates to go?
Yeah, of course. Well, absolutely. Of course, nobody knows where the exchange rate's going, but I guess the risk you would carry if you were a client that was holding a foreign currency and, of course, needed to exchange into US dollars to purchase your gold, you then, of course, carry quite a large FX risk. But whenever you sell that gold in the future, the FX market is most likely of definitely going to have changed. So whether it could change in your favor. So when it comes to selling that, you might be able to make a gain there, but it could just quite easily do the opposite. And of course, you might even wipe out your whole profit from the exchange. There is a solution that you may consider taking out, being a forward contract, so hedging the currency. So that would just be locking in a rate for the future. So say when you buy your US dollars and to make your gold investment, you might want to fix the rate then for a year. You could do it up to a year or even up to 2 years. Then that you're not going to there's not going to be any difference between any gains or losses in the FX market.
So that was one of the questions I saw that you answered, and effectively that allows you to do a transaction knowing what your return will be and taking out the risk of foreign exchange change. So classic future transaction.
Yeah.
And you guys offer those, and you're saying you offer those out 2 years, is that right?
Yeah, so it's a forward contract. There's different terms that we can offer, but I'd say on average, the standard holding deposit against that forward contract as a private individual is 5%. So that's just it's not a cost; it's just a commitment to the contract. To say, you're locking in $1 million, you would need $50,000 in a segregated account to offer you that product. We're using it more and more with the markets being volatile in property transactions. Again, as I mentioned earlier, you're going to have this time frame between putting your offer in to putting your deposit down to completion. therefore, yeah, for me, it's amazing the amount of people that aren't considering this. Why would you take the gamble on which is what it is, of the exchange rate moving against you? Of course, it's going to cost you more. Yes, it could be in your favor, but yeah, I think a lot of people, if you're buying your dream villa abroad, that's of course all you're concerned about. I would say taking out the FX risk is probably the sensible way to go.
Tom, any thoughts on trends? I mean, obviously the dollar is quite strong now. I know that nobody knows, but any thoughts on where you see the dollar going compared to world currencies?
Well, the dollar had a historical run against the euro, as an example. And it's starting to fall back a little bit as the US stops raising rates, and the Europeans, at least the way that they've been sounding lately, is they're going to continue because they still have a little higher inflation. They haven't been able to cool it off. So I think in the near term, you're going to see the euro continue to rise against other currencies, other major currencies. Really, inflation is what's going to guide you. You look at any of these countries and you see high inflation, you know they're going to have to raise rates. And if they raise rates, then the dollar's probably going to, do poorly in those. But, given the fact that we've had such a run, it's probably a good thing for the U.S. It's a good thing that the U.S. products cost a little less to outside, so we'll do some more exporting. It's a wonderful balance that goes on, and the economists fight tooth and nail to explain it all. But it's really quite simple, which is each country has a goal of exporting. Each country has a goal of how much inflation they want to deal with, and all you have to do is watch how aggressive they are at meeting those goals, and you have a pretty good idea where things are going. Again, there's always, I don't even want to call them black swans because they're not that rare, but you'll see big movements. I mean, you see it in Turkey, you see it in a bunch of other places where governments just turn on a dime, and you can't really predict some of those things. But for the major ones, and China's talking about cutting, which is really fascinating. So yeah, I think probably Will and Dan have a wonderful time. Every day they come in and they take a look what's going on. They probably will check off 2 or 3 things they saw coming, and 2 or 3 things they said, wow, that's not what we thought it was yesterday. I mean, I don't want to speak for you guys, but that's what I do when I come in and I see the currencies.
That's what makes markets fun. There's another question here, which is if I wanted to buy a property to retire in the US, couldn't I just buy it and come and go as I like? There are actually, LCR works a lot with people who are interested in moving and spending a lot of time in the US and would like residency. There are tourist visas, but they're limited to 6 months, and you have to count days over years. And that's one of the reasons why you can buy a property in the US, but you do need to manage your immigration in terms of the number of days you're in the US using your property. That gets to be an administrative pain for folks, and it's often why people look at more permanent solutions. If they've earned a lot of income overseas and they don't have income, they're not taxed on wealth in the US. And so they invest in something like the EB-5 visa, which we do a lot of. It's a significant investment, but then you are a green card holder and a permanent resident, and you don't need to count your days or be concerned that because it's your daughter's graduation that you can't attend because you've overstayed your time on your B1 tourist visa. I think we're at the top of the hour. First of all, I want to say a big thank you to Will, Dan from Fibre, and to Tom. Of course, you guys have both been, provided some insights on the lighter sides of why we look at international investments, and some quite deep details down to even future contracts on foreign exchange trading, which I look forward to having to take advantage of that at some point in the near future. Thank you all. It's been a wonder having you on this LCR Worldview webinar. We have recorded this, and we will share it out to everyone who's registered. And if you have questions, feel free to reach out to any of us directly. Thank you, John.